Okay. Good evening, everyone. I am CA Nandini Kothari, moderator of this VCM. Before starting this section, I would like to appraise you about 21st World Congress of Accounts, which is going to be held for first time in India from 18th November 2022 onwards. To know more about this, we would request our technical team to play a short information video. Please register yourself.
Geographically, the seventh largest country in the world, one of the oldest civilization, world's sixth largest economy, a global hub for innovation with one of the largest startup ecosystem. India, city of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy Profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICAI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.
Hello, everyone. We are delighted to welcome you to our VCM organized by Continuing Professional Education Committee of ICAI. And it's my pleasure to be a moderator of this section. Today's topic is important checklist for statutory audit under Companies Act 2013 and system and opportunity for CAs. Within a short time, we'll start with our speaker. So I would like to introduce Shri CA Atul Gupta, who will tell us about system and opportunity for CA. He's a chartered accountant by profession, and he has completed his MBA in marketing from Indira Gandhi National Open University in 2002. Also, he has certificate in competitive marketing from IIM Bangalore, and he's done this IIM Bangalore certification in February 2010. He has also completed his BE in electronics from University of Mumbai in 1996. He is a leverage guru, public speaker, and social entrepreneur. He is the author of two books on business opportunities and innovation, and he's still trying to write a book, and it's in process. He's a global traveler, so he likes traveling a lot. With this short introduction, I would like to introduce CA Atul Gupta ji, who will tell us about system and opportunities for CA.
Okay, so good evening, members. It's a pleasure being here. See, it happens, generally it happens, as now we have rains in our side of the country also. So Nandini madam wanted everything like to be a green technology. So she decided to start the session from a garden outing. तो आपको जो ग्रीनरी दिख रही है वो मौसम की वजह से है, और दो स्पीकर हैं, तो जो इंट्रोडक्शन नंदिनी मैडम ने दिया है उसमें नाम मेरा था, पर सारी डिटेल स्वाति मैडम की है, तो मैं 1 मिनट में क्लियर कर देता हूं, मैं अपने आप को इंट्रोड्यूस कर देता हूं. बट इट वाज गुड टू हियर अबाउट the next speaker. I am by profession a chartered accountant, and I have been associated with the institute since long. So that is the briefest that we want to have, and it is let us accept it the way it is. So let us start the session because we already are short of lot of time. So the session is system and opportunities for chartered accountants. Now, what exactly is the theme? मैं इस session में क्या चाह रहा हूं, that I want to discuss. So I just want see what is exactly happening. The profession is like the speed of change that we are feeling in the profession is very, very high. I understand that today we just celebrated our 74th day of establishment, roughly 350,000 members and 750,000 students. So we are already a whole group of more than 1 million people part of the same profession. So what is happening since last 10-15 years? Technology itself is taking a lot of space for us that we have been practicing since long. I understand that many of us come from traditional practice background. So I'll just put few things before you. To start this session itself, मुझे अपने सेशन को बेचना है, आप अच्छी तरह खरीद पाए, इसलिए कुछ बातें शेयर करता हूं, so that we can learn, we can improve, we can get to the intensity of the topic itself, the way it is. Okay, so the session is basically looking to systems. Now, there was a discussion we had with the CP committee on the name of this session. So I did talk to Krishnakant, and the committee has been coordinating very well. All of them are working on Saturday. So I told Krishnakant, I want to keep the name systems, so that this whole anxiety, what exactly is system, what we mean by system. So I wanted that confusion to carry, and as we go ahead, we learn that the opportunity this word itself creates for us as chartered accountants. So the point that I wanted to make was, since last 10-15 years, see, technology is making huge inroads. Those who are from the senior part of the profession, say 10 years or back, those who are in taxation as a professional, you have realized that if you take the time frame 10 years back and today, the direct taxation, the whole way the way direct taxation is being done, or the procedures, assessment, everything is a virtual revolution. I call it as a revolution. क्रांति आ गई है जिस तरह से इनकम टैक्स डील करते हैं. Just 2 days back, one of my friends, a chartered accountant practicing in taxation, he called me and he told me, Atul, ये 4 महीने में पहली बार डिपार्टमेंट आया हूं. That itself tells the way things are phenomenally changing. We already have faceless assessment, and the way the government looks to ease of doing business. So a lot of things are going to be improved upon as things progress. Then AI, artificial intelligence itself is making inroads. There are opportunities, and it creates a very important threat, if you like to see it like that, that AI is going to take a lot of position of we as professionals are doing in the coming 5 years. GST, 1st July 2017, we'll be celebrating 5 years of GST. In fact, yes, we just celebrated the 5 years of GST. I missed that date. So within 5 years, those of you who have been practicing on GST, you all realize that the work that you had when it started and the work you have today, there's a drastic reduction in that. And my personal take is e-invoice is further going to reduce the volume that we all have as practitioners for GST per se. So as things stand, we need to create more opportunities, and where those opportunities lie is the theme of this session. Please understand, it's a very crisp, very short session. I did talk to the technical team that am I going to get queries from the members. So you put it in your chat box, the technical team will put in my chat box, so I'll be able to see your queries. So please ask questions at any time of the session you feel good at. So let us start. Now, what I created, so I created this word system, and I've taken two definitions with two different ways. So first, let us read that: an organized set of ideas, theories, or particular way of doing something. So these are online dictionaries available. So this part, system, as it exists, as it is defined, the way it is. So that is part A, the way you are doing your work. आपके काम करने के तरीके को system कहा. और एक दूसरी definition, a set of computer equipment program used together for a particular purpose, took another online dictionary help, that is from Cambridge. Now this, the base we changed to technology. So if you look at it, so there's a part A, the way you are working, part B, the way your system is working, your software, your hardware, your computer, your technology is working. Now with these two definitions, we are going to read opportunities in these two parts, part A and part B. And I'll be sharing more of a practical experience like. So whatever we will be talking about, see, I'm clear that to whom I'm addressing. So I'm addressing SMPs, small, medium practicing firms. So when I talk about opportunities, I imagine SMPs who are going to encash these opportunities, and to whom they are going to encash, to whom they are going to provide services, MSME, micro, small, medium enterprise. When I say medium, I calculate that enterprise who are going to have turnover up to 250 crores. So 250 करोड़ तक के टर्नओवर वाले लोगों के लिए अपन बात कर रहे हैं, और स्मॉल मीडियम प्रैक्टिसिंग फर्म के लिए बात कर रहे हैं. कभी भी आपके मन में विचार आए कि whatever we are talking about is for say large listed companies, 1,000 crore turnover, delete it. This opportunity lies for these also. So let us take it one by one. We'll take part A's opportunity, part B's opportunity. We'll discuss them, and during the session, I'll try to share live experiences, practical experience, the opportunity it creates for you, me together. Implementing the way of doing, part A, the way system is working. So let us take, so what I'll bring bullets and then try to share the practical aspects, and part B will be implementing computer system. So we are basically on technology itself, the way you are working and with the way your technology has to work, the way of working. Now, Please understand, each line is an opportunity, and each line could be a 4-hour discussion we can have. So what I'll do to make it easy, simple, I'll bring cases to you, and then because I love this interaction, but the way the platform is, I'm not able to see you, visualize you where you are. So if you just ping in the chat your queries, questions, so that is going to make the session interactive. Okay, so let us read them, and then we'll take case one by one, cases for each of them, and opportunities, and the way you can bring it up. Configuring software. So configuring software is when you buy a software. So let me share some experiences with you. We sometime back we had an experience. Now see, whatever experience I share is basically to create that intensity that yes, this is what I can do. Okay, so sometime back we had some opportunity of implementing uh, core banking solution for a cooperative bank. So when we went for that, there's a whole process done. I'll be sharing that. Then once you buy a software, so banking software, so there are number of makers of a banking software. When you imagine India, so the top 3 core banking system selling companies are Infosys, TCS, and FlexCube, now acquired, iFlex, now acquired by Oracle. So all core banking systems in public sector bank, more than 90% of all banks across India are covered by these 3 software companies: Finacle by Infosys, Banks 2000 by TCS, and FlexCube by iFlex. Originally, now iFlex is part of Oracle. Now, when you buy a software for a bank, you need to configure the software for the requirement of the banking company. So here is the software, here is the business. So you merge that. That itself is a big opportunity. Please understand, I've used the word cooperative bank. Please understand, this bank is in your city. Please, and just something more from the legal side I want to share with you. 2 opportunities lie in the city that you exist: cooperative bank, and recently Reserve Bank of India issued a circular for non-banking finance companies also. All cooperative banks need to have a core banking system. All non-banking financing companies need to have a core banking system. For cooperative bank, the requirement of RBI, to what I know right now, is more than 5 years back. For non-banking finance company, the requirement is to be completed by 2026. So it's an opportunity that is lying down there. You go to the cooperative bank, you go to the banking board of governors, make a presentation that these are the softwares, and if you're buying a software, we are going to configure the software. Now, when I say configuring software for a bank, what I mean, so I'm just trying to give very simple definitions. Please understand, the session is too short. It's like a Twitter message, okay, for a long essay. So we'll keep that crisp. So what exactly I mean by configuring the software, I'm giving an example for that. Like Reserve Bank of India has been giving banking license. So you have some new category of banking licenses being given by Reserve Bank, like a small bank, a payment bank. So these new category of licenses are being issued by Reserve Bank. So small bank means there is some definition to it. So small bank, for example, small bank will mean a bank where the individual advance to a borrower is never going to exceed 5 crores, and a group advance to a group of companies of the same borrower will not exceed, say, 10 crores. That becomes a restriction. Small bank, more definition. Reserve Bank of India has mandate for SLR, statutory liquidity ratio, CRR, cash requirement ratio, ALM, asset liability management. So RBI may have a specific mandate, more stricter regulation on this new category of small banks. So when I say configuring a software, what I basically mean, these available general purpose softwares need to be configured, multiplied by the requirement of Reserve Bank. The present requirement of Reserve Bank for these small banks, that becomes configuration. Huge opportunity lies for all of you to get into. What opportunity I am sharing, you need not travel to Bombay or Mumbai, Delhi, Bangalore, Kolkata, Chennai. It lies in the city you are, because all the city have non-banking finance companies and all the city have cooperative banks. So first is configuring software. Second, This one, I think it's a huge opportunity which all of us must do. Configuring master. I'm just sharing an example with you. Like most of the clients I am talking about, MSME, most of the client, as we understand, they use some accounting software. And for the sake of discussion, I'm bringing a name out here. Say, for example, most of your client use Tally. Now, your client using Tally and their turnover is say more than 10 crores, or those clients which are covered in GST, this return filing for GST. So there's a monthly quarter, and huge list. Now we are all part of WhatsApp group. So there's someone who takes the effort and tells us, see, these are the compliances you have to do in the month of July. Then the same person will post in the WhatsApp group the compliances to be done in the month of August. There's another smart member of the group who tells, no, these are July, August, and let me tell you the compliances you need to do for the month of the quarter to quarter three, like that. So a lot of compliances to be done. What I personally realized, that if you have an accounting software and you configure the master properly, please understand, configuring master properly itself is a great help to the entity who is doing GST compliance. Because what I have learned, what I've realized, whatever accounting software you use, if the masters are correctly configured, the GST definitions of vendors, customer, their GST number, their GST categories, say exempted, SEZ, regular, compounding, if all these definitions are correctly put in the software, 95% of data that you get from any accounting software is valid data. It can be directly uploaded to the GST portal. It's a huge opportunity configuring master. In fact, if you, and because it's online, so not many things can be put in a quantity terms, value terms, but believe me, it's a huge opportunity. Now see what you do. I'm just sharing this with example. You can start configuring masters. Now, once you start configuring master, so the realization is very fast. In fact, the payback is very, very fast to the entity to whomsoever you provide this service. Along with configuring master, you create what I have just said is, once it is done, once you deliver the configured master to the client, you create a SOP, standard operating procedure, create a document, give it to the client that now we have completed your configuration. Next, suppose a vendor has to be added. So you create a SOP for vendor addition. Believe me, see, it might appear slightly different. We are creating opportunity. So I am talking of MSME. We must be in a position to sell out this product to the owner of the MSME, why he needs. And that selling out, I am telling you, once the masters are configured properly, if the accountant of the client is taking 3 days, 4 days to compile GST data with configured masters which are done properly, the time is reduced to less than 3 hours. Believe me, payback is very fast. So once you configure master, you create SOP for the client, standard operating procedure. Just taking an example. See, this may appear very different, but it has to be put in place because there the opportunity lies. You create SOP. Say you create SOP for vendor, new vendor creation. Now, if I want to create a vendor, we are doing it in our own office itself. When we create a new vendor in our Tally, say new bank, we are providing service. When we create a new bank, one of the few things we mandatorily collect is the GST number, validate the GST number on the GST portal, get the correct address from the GST portal, and then only put that vendor in our Tally. You create an SOP form. So vendor is only one example. Customer, expenditure, you have this, on expenditure side, you have RCM, reverse charge mechanism. So all this you create masters. Once you create master, create a SOP for the members to use. Once that standard operating procedure, that manual, it can be hard copy, PDF, online, whatever the way you like it. Once you do it, ensure it is implemented. Once it is implemented, ensure that the members who are going to use it are trained on it. And if some addition, some law changes, something new comes about, then you start with maintenance of standard operating procedures. This itself is a big, big scope lying there. And believe me, from 1st July 2017 till the 5th year, we had just a day back. This one of the professions where the attrition rate is very high, and those accountants who had good knowledge, good understanding of GST, they have made phenomenal, their earning levels have increased like anything. So this itself is a big opportunity. 2-3 locations I have shared with you: the cooperative bank, the non-banking finance company, your own existing clients, their softwares need to be configured. That is first part way of working. We are keeping it very crisp and short. Okay. Part 2 will allow more time to come. Implementing computer system. Okay. I want to share a case with you. There are two parts to this part B, slide 1 and slide 2. Right now we are on slide 1. So when I became chartered accountant in January 97, so exactly 25 years back, and it's a privilege. We're part of a great profession. It makes so, the feeling is so proud like that. So, so when we became chartered accountant, one of the first engagement we did was, there was a company then, we got an assignment to select software for the company. So then we listed all the available softwares that time, then got the requirement of the company. So these are the list of 10 softwares. This is the requirement of the company. Match it. So first phase, 4 software vendors were selected. Then those software vendors were allowed to make presentation. And finally, one of the software vendors was finalized. And that person was given a job. That person was given the engagement assignment. Software was purchased from that vendor. During this start of the COVID, that time, we got another opportunity. A company, a garment company with a turnover up to 250 crores. They had selected their ERP, selected an ERP, and they wanted some help to implement the ERP. So we were asked to implement the ERP. The ERP was there, yes, software was already selected. We were asked to be part of the implementation process. So we went there. Now, the first month of implementation, when we joined as their implementation partner, we got this feeling that the software is not working properly. Means there's a mismatch between the software the company has selected and the business requirement. So we made a presentation to the managing director of the company that, see, there appears a mismatch. So then means we felt that this software is slightly not as per the needs and requirement of the company itself. So, but then because the company had already selected, so the MD told us that let us continue. So by the end of second month, the company itself realized that the software they had selected is not as per the requirement of the company, and they shelved the project. The cost of shelving the project, उस प्रोजेक्ट को, उस सॉफ्टवेयर को कंपनी ने डिसरिगार्ड कर दिया, और उसको डिसरिगार्ड करने की कंपनी की कॉस्ट थी. कंपनी had already expended an amount that was equal to 20 lakh rupees. Please understand what I am sharing. So the company had selected a software. So the software vendor, they must have made some advance payment. Then before we joined as an implementation team, the software vendor was there for 3 months. So their team was already configuring master, compiling data. So the team had been staying for 3 months, hotel, traveling, food, lodging, all invoices, some advance to the software vendor. Then the vendor must have said that for our software, you require this category of IBM server. So company had bought those IBM server. And because we were there for 2 months, so company must have paid some money to us also. By the end of second month, the company realized that it's a very wrong selection. They shelved the project. They went for another software. But 20 lakh was lost. Please understand, before you merging part A and part B, before we start implementing the software that has to be implemented, the selection of the software itself is a big, big opportunity that is open to you. So that you can do for your cooperative banks, that you can do for your non-banking finance companies, and most of your MSMEs now, because they use some specified software, you can start configuring their software. So see, at single location, so many opportunities lie to you. And once the software has been selected, the first aspect is full-scale implementation partner. So we all have read, I understand that SDLC, System Development Lifecycle, you have all read. So full implementation is your part of all the phases of this software implementation. It's a big, big opportunity that lies there for all of us to get it. Let us go to the part B of this session. Expert at each stage of system implementation. This interaction has to be there. I love talking to people, but the technology is not allowing me to. But then with question answer, we improve the quality of discussion. Okay. Now, so this you have all read. ये आप सब लोग पढ़ चुके हैं. You have all read this as a part of your CA syllabus. So we'll take cases. I'll bring some more cases to you, and then we'll take about. Now, see, these are the phases that you talk about system development life cycle, SDLC. हम सब ने पढ़ा है, CA इंटर में पढ़ा होगा, CA फाइनल में पढ़ा होगा. आप में से जिन्होंने पोस्ट क्वालिफिकेशन कोर्स सिस्टम ऑडिट का किया है, डीसा, उन्होंने भी पढ़ा है और हमने पढ़ा है और हमको याद है. That is what I recall. So these are the phases. Now, full scale implementation is a big opportunity. So see, the opportunity is you are part of the software selection. Then once software is selected, you become part of full implementation. Once you become part of full implementation, then you configure the software and the masters and create SOP and train the user on SOP and maintain the SOP. It's a huge opportunity that is there. Now, this is the whole size of implementation. You are part of each phase. So I'm taking phase by phase. Preliminary investigation. So what I'll do? The definition, what you and me can deliver, and what value it brings to the entity. So preliminary investigation. Technically, preliminary investigation is making an assessment that whatever software is sought to be bought, जिस भी सॉफ्टवेयर को खरीदना चाहते हैं, जिस सिस्टम को इंप्लीमेंट करना चाहते हैं, whether it is feasible. So within preliminary investigation, you do a lot of feasibility studies. One of the feasibility study that is done, you may call it as economic feasibility, financial feasibility, and legal feasibility. Very, very, very important. We as chartered accountants, we as practitioners of the taxation profession, compliance consultant, compliance assurance service providers, this is one aspect that is very, very important for us to go about. I'm just bringing a case. I generally love to share this case. Why this is so important. Some time back, during a bank audit, we came to know that the this year also many of us have done statutory bank branch audit. So for substandard advances, the provision to be made is 15%. So general substandard advances, you make a provision of 15%. If the substandard advances per se are unsecured by nature, for general substandard advance, the provision is 15% as per IRAC norm, income recognition asset classification. For those substandard advances where the advance, just give me a second. The advance by nature is unsecured. So if my substandard advance is unsecured by nature, then my provision is 10% additional. So general provision of 10%, 15%, and for unsecured substandard advances, 10% additional. Sometime back, when the IRAC norms said that the substandard advance general provision is 10%, and for unsecured advance 20%. So that was the previous provision. Today it is 15 plus 10, 25. Some time back it was 10 plus 10, 20. So when it was 10 plus 10, 20, we went to a statutory bank branch audit. They had their NPA calculation sheet ready. In that NPA calculation sheet, they had calculated there was a 1 lakh rupee credit card outstanding, which had become substandard. Credit card outstanding substandard ho gaya hai. It is unsecured by nature. But the calculation sheet of the bank said that it is for 1 lakh, the provision was 10%. मतलब स्टैंडर्ड प्रोविजन किया था, एडिशनल अनसिक्योर्ड होने का 10% प्रोविजन नहीं किया था. The total substandard advance was 1 lakh rupee. System had calculated provision of 10,000 rupees. So we raised the query to the branch manager. Branch manager initially said that it is a system driven calculation, it is correct. But then we convinced the branch manager, he was convinced. As soon as the branch manager was convinced, he told, sir, this calculation is not done by me. We gave data to regional manager, regional office. They gave us the calculation. We called the regional manager. Same 15 minutes to convince the regional manager. He was also convinced that the calculation is incorrect. Once he was convinced, look what the regional manager said. He told, sir, we got data from branch. We got software from head office. We merged the two. So we have done nothing. The software came from the head office. The data came from the branch. We merged the two and the calculation was generated. So we only put the data as provided by the branch. We have done nothing. The software was from the head office. We called the AGM IT of the bank at the head office. That person acknowledged the error. Now please understand. Legal feasibility of the software. Very, very, very important. In fact, it itself has become a big opportunity. Whatever software entities are using, whether they are as per the requirement of statute, whether they are as per the requirement of law. In fact, because we are all part of the bank audit profession, we all provide bank audit services. To what I know best, Reserve Bank of India has already mandated banks to have automatic NPA calculation software, so that NPA is correct calculated as needed. It cannot be tampered with. That becomes part of the legal feasibility study. So if just see, so you are doing job and this becomes a critical aspect to deliver. Then system analysis. System analysis is where I am. Now I'm defining system analysis. So system analysis is where I am, where I want to go, and what is the path. मैं कहाँ हूं और कहाँ जाना चाहता हूं, उसका रास्ता क्या है. That exactly is what is system analysis. We as professionals, we always say that chartered accountants are very good analysts. So any entity that is going for implementation of a software, they need this service, the path, and we are capable. Our domain is finance. So any software that has accounting implication, financial implication, this path can only be done through the help of a member of the profession, through the help of a chartered accountant. मैं कहाँ हूँ, कहाँ जाना चाहता हूँ, system analysis. Then system design, very, very, very important. See, there's a word that comes with design. All controls are established in system at the design phase. So when a system is being designed, design part is completed, there has to be an audit done whether the requisite controls have been put in place. जो controls चाहिए उस system में लगा दिए गए हैं या नहीं लगाए गए हैं, that consultation you are in a position to provide. Of course, you may get a feeling that we will be developing a software. No, you keep yourself on your domain. What is your domain? Your domain is analysis. What is your domain? Your domain is control analysis. What is your domain? Your domain is financial analysis. So you can link these aspects and bring the opportunity that members can get into. Design part, that all controls that are in system are built into this phase. Like I'm taking this example from Tally. I love talking about this one. See, in Tally, when you pass a cash payment voucher, and if that cash payment voucher is passed the cash balance will go negative. The software gives you a warning. It's a preventive control. It gives you a warning. सॉफ्टवेयर बोलता है आपको इस वाउचर को पास करेंगे तो कैश बैलेंस नेगेटिव हो जाएगा. It tells you. A pop-up comes on the screen. 90% of the time, the accountant of the entity, he presses a key called as Control A. Control A is save the voucher. Don't worry about the warning. Also, it's a huge risk. The accounting software gives a warning. It's a good warning. You need to listen to it, but it does not restrict. So control is there at a warning level. Control is not restricting you to pass the transaction. Now, as things have evolved over a period of time, see what has happened. Faceless assessment. I just talked about the accountants have a lot of attrition in entities because accountants with some good knowledge of TDS or GST, the required. Today also, all your clients, all my clients, there's a job vacancy. I'm reading that job vacancy for all of us. आपके सारे क्लाइंट के यहाँ और मेरे सारे क्लाइंट के यहाँ पे एक जॉब वैकेंसी है. You know what is that vacancy? The job vacancies, we all need good accountant. We don't know what is good, but we need a good accountant. So this job vacancy exists. Now what has happened? The accountant who got the audit done is not there when the assessment is being done. So there's a new accountant who is getting an assessment done. Faceless assessment. Income tax 143(3), 143(2), or other sections of the income tax, you get a notice of this assessment to be done. And the new accountant is so angry with the old accountant. Kuch bhi karke chala gaya. Now I have to get the assessment done. So you get this faceless assessment, you get a notice of submitting the cash book. 2 years old cash book, the new accountant generates. He does not look into the cash book. Tally has a system of warning on exception report, negative ledgers. He does not go there, generates a PDF, files. Now when AO sees the cash book with negative cash balance, I don't want to tell you what he or she AO can do. Design whether the controls needed are there in system or not. So that consultation is again a big consultation that you, me, must be able to provide. Then system acquisition, hardware, software. The way we are, the services we provide, we have capability of providing more consultation of the software acquisition. Live example I have shared with you. It's a must do not for you, for your client. As simple as that. If the client decides to select Tally also, a simplest accounting software, believe me, if he goes through the process of validation through a domain consultant like you, me, a chartered accountant, there is a lot of value addition built in the process. So acquisition, mandatorily software acquisition has to be through members' help. Then next is testing. You must be knowing. There, I know chartered accountants who are engaged by big companies who provide this system software testing as a separate service, just as an example, to bring the scope that it exists. Then I'll share a smaller example also. First, the larger one. You know, this bank mergers that was made effective. So I think the merger was from 1st April 2020, if I'm correct. The system merger was done 6 months after. So 3 banks, 9 public sector banks were made into 3 public sector banks. So there is a legal merger, there is a technical merger, there is a system merger. So all bank system were merged. I am also account holder of one of the banks which has been merged into another bank. Okay. So, but my account number remains the same. My IFSC code has changed. Okay, IFSC has changed. Account number is same. So all this merger had been done. So this company provides testing services for these merged banks. So when the merger was done, this company at the top provided validation whether your system merger is proper. It's a big ticket size merger, big ticket size opportunity, but let us make it small. We all use taxation software. Some time back, we had this opportunity of doing a functional testing of a taxation software. What I told you, we are looking at SMP, small medium practitioner, and we are addressing MSME, micro, small, medium enterprise. So this opportunity lies to you also. And in fact, my very personal feeling is this COVID, Corona lockdown, March 2020, we are 2 years after that. Lot of business have created digital platforms, app-based businesses have increased. So lot of data collection is there. In fact, we found that this, like you can think of Flipkart, Amazon, Snapdeal, Myntra, Jabong, any of these online platforms. So a lot of sellers are there who sell their product through these online platforms. So we suppose we are a buyer. So you interact with Amazon, you are not interacting with the vendor that is linked on Amazon or Flipkart. But we had a chance to be at the vendor side who is linked to these online platforms. Believe me, the immense amount of data it creates there has to be a lot of validation to be done. So because technology is there, data is driven through technology, whatever system is being used, or validation has to be done by you, me, whether all things are working properly or not. That is providing service at a testing level. Then once system is implemented, you provide services for implementation, whether implementation is correct or not, as per the need of the entity, whether implementation meets the objective of the business. And once implemented, software needs to be maintained. Maintained means regular changes. Yes, I want to share this maintenance of the software, a real good case for you. So sometime back, we got this cooperative bank engaged us to give a system audit. The target of system audit was that we had to find lacunas in the software and make a comment to the board. हमको सॉफ्टवेयर में जो lacunas थे, जो gaps थे, वो generate करना थे और management को report करना. So we did the audit. We generated the report. Whatever report we gave is not relevant right now, I'll tell you. But there was a phenomenal gap that relates to maintenance that I want to share with you. So this bank, they had a software. The software was provided by some vendor. The bank had AMC with the vendor, annual maintenance contract with the vendor. Now, if I am a bank and I have a AMC with I am using a banking software, one of the important things that must be there in AMC, you know what is that? Because my regulator is Reserve Bank. So if my regulator brings something new, some new requirement, just for example, statutory liquidity ratio calculation or cash requirement ratio calculation, asset liability management, any of these words, any of these calculations, anything that it changes definition. So the AMC, the annual maintenance contract that I as a bank have with my vendor, it must have a clause that whatever changes Reserve Bank of India is going to make, the AMC owner, the vendor, the AMC service provider, the vendor of the software has to implement that changes in my software because I am a bank. I need to comply with the Reserve Bank of India requirement. When we read the AMC, that line did not exist. Maintenance. So when you are buying a software and there are changes to be made, so you must check whether the annual maintenance contract, if it is given, you can means that itself is an auditable document. The service level agreement that you have with your software vendor, very, very, very important aspect. Now, so coming to the, I made it very short. Coming to the conclusion that we had with that audit of the bank. So we told the bank that something more. So when we did that audit of that software, again, that software was already implemented. It never went through us. Okay. That software did not have module to calculate ALM, to calculate CRR, to calculate SLR. Believe me, a banking software not having a module to calculate these three means, I'm just giving an example for understanding purpose. If the software is not calculating these three things, that means it's a disaster. That means the governing board of the bank did not realize that when they are going to go for selection of a software, they need to take help of a domain expert. And who is that domain expert? You and me sitting here. It's an immense opportunity lying there in the city that you reside. I'll bring more on that. It was a phenomenal experience that allowed me to bring so many aspects of this professional services that we can provide. So the board, in fact, then we educated the board of governors that please understand, whenever you have to select the software, you require a domain consultant. The final thing was that the software was shelved. We asked them to throw it away. It was a scrap. It brought some confidence in the bank. So they said, okay, now you please get a new software implemented. You get us a core banking system implemented. See the opportunity. And believe me, I'm only talking of SMP, small, medium practitioners, and micro, small, medium enterprises. This is what we wanted to talk about. I'm open to queries. I've kept it at 450 because Adukia sir, he is supposed to join by 450. So I'll request the technical team, if the queries are there, they can post in the chat so I can respond. But whatever we've talked about.
Parth, is there any query?
Okay, so I've kept it very crisp. Believe me, each line, we can have a huge discussion made out of this line. Everything is absolutely professional, and none of the thing is like, nothing has to be like a discussion point theory. Everything has to be absolutely practical. Okay. So kept it very, very crisp.
Sir, meanwhile, the chairman sir is joining. May we request you to, if you wanted to add something?
Yeah, okay. So thanks. There is no query. So अगर कोई query नहीं है, इसके दो मतलब हैं. या तो सब कुछ समझ में आ गया, कुछ समझ नहीं आया. But thanks for this. Okay. So let me add. So more experiences on system. Sir. I love to talk about that. Okay, great. Now, so this bank, cooperative bank, which I am talking about. So we give this report that your system is scrap, please throw away. So the bank asked us that you get a core banking system implemented. So I'm sharing one more opportunity that I probably could have added here, but I missed it out. So much opportunities to do. So we got that core banking system implemented. So when you go for a CBS implementation for a bank, you have to call the vendor codes, vendor tenders. So we created something called as RFP, request for proposal or invitation to tender. To create RFP, to create invitation to tender, to implement a core banking system itself is an engagement. Please understand. So just understand, we have talked about 20, 30 opportunities here itself. Selecting software, configuring master, creating SOP, every stage of implementation, creating the request for proposal, and then creating the annual maintenance contract. That itself is an opportunity. The bank, we did an audit, they did not have proper annual maintenance contract made with their borrower, made with their vendor. You create that opportunity. So all things are there which are implementable. And I'm very much for system. And believe me, today when you go for financial audit, system audit per se, the last aspect that we can have is system audit itself. Whatever we have talked about as a consultant, as an implementer, as an outsider, whatever is being done, it is auditable. So system audit for each of this stage is a separate opportunity. To me personally, today, system audit is going to precede financial audit. आप किसी भी एंटिटी का जो सॉफ्टवेयर यूज करते हैं अकाउंटिंग उनके काम करने के लिए, बिफोर यू स्टार्ट बिलीविंग देयर फाइनेंशियल डेटा, please ensure that that financial data has already been subject to system audit, because without system audit being done, you cannot have your financial audit completed. So that is what I want to say. Okay. That completes what I wanted to share. Okay. So that is from my side. I want to hand it over to CP committee. Yeah.
Yes, sir. And Nandini ji, may I request you to kindly take
Yeah.
over the proceeding?
Yes, sir. So Atulji, thank you so much. So thank you so much for giving us a new opportunity. The area which we can explore, the area we. So this is an opportunity where we can try our hands and we can earn a good amount of money. Thank you so much, Atul sir.
Thank you.
And now our other topic is important checkpoint for statutory audit under Companies Act 2013. And I would like to introduce CA Swati Tejwan to brief us on this topic. As we all are aware, statutory audit is a very important aspect, and every company is following the statutory audit, because when the department will ask us a question and our audit is done properly, then we can able to give proper answers and we can able to save ourselves. So everyone used to do statutory audit. Miss Swati is a practicing chartered accountant. She is also associated with Institute of Company Secretary, and she is a registered valuer for security and financial assets. She specialized in practicing area of corporate and insolvency law. She is also a faculty of member of ICI Guwahati as well as ICSI Guwahati for conducting various training program, and is a resource person for various branch activity of ICAI Guwahati branch. She has spoken at various platform of company on Companies Act and other topics. Her paper on corporate governance under the Company Act have been published in leading journals. So we welcome you, Swati madam.
Thank you so much. Thank you so much, Nandini. I hope I'm audible.
Yes, ma'am, you're audible.
I'll just share the screen. Just give me a minute. Nandini, can we start the session right away?
Yes, yes.
Yes, ma'am.
Very well. Thank you. A very warm to each one of us present here at this VCM today. The topic that has been given today for discussion is important checkpoints for statutory audit under the Companies Act 2013. And like Nandini ji said, it is a very, very relevant topic because of the fact that all companies have to mandatorily get the statutory audits done. And for financial year 21-22, we are all reeling under a plethora of changes that have happened in the Schedule 3 of the Companies Act, which basically lays out the format, if I talk in a very raw sense, and also changes in CARO 2020. There are also changes in the company's audit and auditor rules 2014. So with all these changes all around, I'm sure that we as auditors are a little apprehensive with the additional, points of disclosure, additional points of reporting that we need to make. So today's deliberation we will try and touch upon various important checkpoints from the point of view of audit for financial year 21-22. In the meantime, I also acknowledge CA Rajma Adukia sir's presence. A very good evening to you, sir.
Very good evening. Swati, with your permission, if I can take 5 minutes.
Sure, sir. Please, sir.
And we were not knowing, otherwise we would have written you Dr. Swati Tejawat. And we have a PhD WhatsApp group. There are about 75 plus chartered accountant across the globe are PhD. So
sir, I have not yet completed, so I've just submitted my
thesis. Okay. Your written PhD research scholar. Swati, yes, can you just stop sharing for 5 minutes?
Sure, sir.
At the outset, I would like to wish a very belated happy CA day. And I want Parth to give me the statistics of number of members on this webinar. And I would request members to ask me some queries for next 2-3 minutes. I would like to congratulate CA Atul Gupta ji and CA Swati, CA Nandini, CA Kamal and the whole team. I see Ms. Poonam Tyagi from the CCL, Krishnakant ji is there. So the mission which the two committees which I am chairing, there are other two which is not holding the webinars in that sense. There is a committee called How to Make Firms Global. So I'm heading that, and we have a centralized distribution system. But the two committees, one on economic and commercial law and economic advisory. So we have a webinar in that committee on Friday, 2 sessions. Now that is a whole world, 7 continents, because the business laws covers everything in a economic environment, in the entrepreneur environment. And economic advisory is the foundation, the base. And I do not find many knowledge sharer. And Saturday is like again a whole world, because we can keep a webinar on any topic. It's a CPE, continuing professional education. So professional education happen in any field. Now, in my life, when I have addressed on a topic, I have addressed for about 40 years. So I always took a topic when my knowledge was zero. And but I used to take 2 months time or 1 month time, depending on the time available at my end. And at the end of the preparation, I found that preparation was like an encyclopedia on that subject. And with all humbleness, I can say that even those who are very expert on the subject, they felt, no, the new things have come up. Why I am sharing this, I want each of the participants who are viewing this, for the information of both speakers, there are 1,300 participants. The registered are 2388. And 1294 is those who are logging, and we are presuming that they are seriously viewing us. Then another thing which I want members to each want to take up is to write a book. Like the today's two topic we had, system audit, which we can also call information system audit, and a company statutory audit. We can write a book on each subject. There's a concept which I want every member to have a look at it. Thought leader. जो दिखता है वो बिकता है. And thought leader is one who is seen on that subject, and seen is by speaking or by having a written material on that subject. I consider written material maybe more important. Now, spoken material also on a YouTube channel, once we have a particular number of hours and particular number of subscribers, 1000 subscribers and a defined number of hours, YouTube channel will give us the income. That will be an inactive income source. And when I'm speaking on this topic, I speak on, yesterday I was at Delhi, so I kept a topic, how to write a book, how to be a global speaker, how to be a global thought leader, how to be a CEO, how to be an entrepreneur. Then at the same time, I ask myself, am I doing what I'm requesting members to do? And from today, I decided, I will make one YouTube video every day without fail. So my, like writing a book, it is so easy. I always create an acronym. So I created, say, a related material, raw material, square feet, and A, architect. So R is you do research. Related material, M is you do more research. S is you speak on that topic. Find out a forum in a family, in a group of friends, in a small study circle. F is you take a feedback. Ki what is lacking in that preparations. And then A is like an architect. Make a blueprint of that book. Make the chapters, make the headings. I want to personally mentor each one of you. The committee, this platform, which is we have created on Friday, Saturday platform, we want to mentor every member who want to speak. Take 1 month in advance speaking, 2 months in advance, 3 months in advance. Similarly, take up a subject to write a book. And we will discuss one-to-one as per your comfort level, maybe once in 3 days, maybe once in a week, maybe every day, depending on the fire in your belly on that topic. So with this, if there is any quick feedback, Parth, be very fast. If there is any question from any participant, any viewer, I would like to answer that. Let that question be left, right, center, anything on ICAI, anything on our committees. I'll be very happy to take that question head on and see that we take some action on that. You can email to me. My contact details are there on social media. Normally, I have a uniform. CA Dr. Rajkumar Adukia is my uniformity on YouTube channel, on website, on all the social, there are 500 crore people out of 800 crore population of the world who uses social media. And social media is one reach without spending a single penny. When I'm saying single penny, there is a minimum amount. Canva is a free platform to design a flyer. Facebook, LinkedIn, podcasting, YouTube channel, they do not charge a single rupee. In fact, everyone will give some income if we use more and more. There is what disclaimers a CA should make before accepting such an assignment, being a domain expert. See, if I claim myself to be a domain expert, say maybe a forensic audit, maybe an insolvency, maybe a valuation, what right I have got to do a disclaimer? Say we go for a surgery to a doctor, a heart surgery. A doctor cannot do a disclaimer about heart surgery. There can be a disclaimer that best of his knowledge, if he does surgery and something unexpected happens. So normally I would say an expert do not make a disclaimer. Then nobody will approach. There is a book called Science of Getting Rich, written by Wallace Waters. Swati, I'm taking 5 minutes, but I felt the whole purpose of this program is to put fire in the belly of members to come forward, because our product, our tool which we are selling is a knowledge. If we are lacking in the knowledge, then we don't earn. And then we can't say we are chartered accountant, why our earning is less. We don't learn the science of getting rich. Science of getting rich says, like where we go, if we pay 100 rupees, we look for a value which is more than 100 rupees. Similarly, our customer, whatever they are paying, they are looking more in terms of value. So if we give more value, they will come to us. They go to an expert, maybe paying 5 lakhs for an opinion. They go to an expert to get an audit done, because there is no key. It is not just a compliance of a Companies Act or a relevant section to get an audit, but it is much more in value. So I personally feel then there is one question, in future contingency be incorporated as a clause in system maintenance contract. Now, this question is a hyper technical. Atul, would you like to answer this query?
Yeah, I wish to. I need to thank sir for having me here, and I need to acknowledge Swati madam's presence also. And with Adukia sir's permission, sir, I want to share something that I know about your life. Please allow me to do it.
Okay. See that
So-
we don't cut down Swati madam's time.
I'll do it in less than a minute.
Yeah. Yes.
So I know sir since more than 25 years, and it's a pleasure knowing him for such a long time. Sir has been a meritorious student, and he is in Mumbai. He told me, Atul, see the level of effort and time you can save. He told me once, Atul, we used to travel in local train, so I'll make notes on a hard paper, so that when I'm traveling also I'm studying. So that is the effort that is needed. It's a pleasure being here. And now coming to the question. So let us save time on that. Just a moment.
I'm
opening the chat. Yeah, it is there. Yeah. So see, future contingencies to be incorporated in a system maintenance contract is basically, you look to the nature of the contract. Say, for example, the example I took, like the AMC provider for a banking software, the things to be incorporated is the compliance requirements have to be made. So in the AMC, the annual maintenance contract, you have clause that mandate the vendor of the software to upgrade the software for any such legal changes, law changes that are brought into place. First, how to start building up knowledge when they, okay, that is for sir to answer. So I have answered the question, sir. Thank you.
Thank you, Atulji. Thank you. I recognize presence of Sri Ajit Tiwari, a very dynamic and dedicated leader. You know, he's a secretary of the CP committee, driving the whole committee, and my expectation is much more than what he delivers. You know, so I keep on telling him, Ajit ji, we need to do more. We need this. Parth, next time, please give the name and email ID and other details of the queries. See, please, mind is the whole driver of our actions. Our body is our chariot. So first, focus on health. Then focus on mind. And live in present. What I did 5 minutes earlier, why I did not join the session at 4 p.m. is totally irrelevant. What is relevant is, at this point of time, am I performing my duty as a chairman of the committee? So the learning will happen at any moment, and the memory increases with the increase of the age. My age, I call, 6 days, 3 hours. So it is 63 years. So I want to live 130 years because Prime Minister has given an award just now to somebody who is 128 year young. So please remove from your mind that there is a gap. So whatever subject you want to learn, this is an open request to all participants, the whole membership of ICAI, 4 lakh members. And knowledge is only one product in the world which increases by sharing. Like on the screen, there are 3 persons, Swati, Atul, and myself. If each one of us has one idea, if we share among 3 of us, each one will have 3 ideas. And knowledge has a tendency like water, it flows outwards. Once I collect a knowledge and if I don't share it, it will become obsolete. It will become stale. And I love, today I talked to Madam Swati that we should have talked on the whole company statutory audit. I myself recalled, like both speakers are talking on audit. We are service provider under Consumer Protection Act, and now it is 2019. The 86 Act is not there. And like audit is a service. There is a class action under Companies Act. There is a section called 447, where 3 times the amount of fraud or amount of loss which has happened to service receiver. There are other laws depending on under which, if it is a management service, then management can put any kind of responsibility in the contract or in the offer letter. So we need to be very alert. We need to be, and audit or any service is not a risk. Sometimes an impression is created in the mind of each one of us. Some people say, now NOCLAR is coming. Now what is NOCLAR? NOCLAR is the same thing what is SA 250, whether all laws are complied with. Otherwise also we are giving that. So what is the risk? I give, Swati, I'll give one example and I'll stop. Suppose I select 4 months in my sample checking after doing a due diligence of the business, internal control in the business, internal audit. Say I select in the month of April, month of July, month of October, and month of January. Now in 4 months, I do not find any serious error, any fraud. And somebody has done a fraud in a remaining 8 months, which are not checked by me, say April month. Let it be of 10,000 crores. My humble, considered opinion is I am zero responsible. Because my audit is as per the standards on auditing. Those are that is the science of audit. Now, science of audit says I have a right to take sample. After studying internal control and after studying the system of the business, and I will go by my science. So more and more we know about the science of our audit, science of whatever service. If I'm giving an opinion, say on any legislation, PMLA or some, see, another myth in our mind is, see, like CA has an exclusive right in audit where the law provides, say Companies Act. This, everything else can be done even by 10th pass. Company secretary has an audit where secretarial audit is mandatory as per Companies Act. An advocate can appear in a court. Tribunal is not a court. So district court, high court, Supreme Court. A cost auditor can do a cost audit. All other services can be done by anyone. So unless a particular law says a particular qualification, so the whole services, we have made a list of 44 services in our CPEC and which we are sharing with everyone. And from the week, like today morning, I decided that July, I will celebrate as a CA month. So every day some video on each service, which is a non-traditional area of service. And Ajit ji, on every Thursday, 5 to 6, I will do a
Yes, sir.
discussion with, say, 15 members or 20 members, one-to-one, how to become a global practitioner in non-traditional areas. So it is 5:20. Swati, I have taken 20 minutes, and over to you. And if possibility is there, we will extend. There is one query whether technical guide issued by ICAI for financial statement for non-corporate entities. Yes, 100%. Because LLP, unless now there is an amendment in LLP law where also the accounting standards will be prescribed, but till the time they are not prescribed, it can be used. Over to you, Swati, without loss of any time.
Thank you, sir. Thank you so much. It is indeed encouraging to listen to you, sir, and we will definitely be on the forefront for sharing of knowledge all the time. Coming back to the topic that has been allotted to me today is important checkpoints for statutory audit. I have already said in my opening remark that statutory audit this time becomes a little more crucial given the changes that have come in. Quick overview, like I'm saying, why is statutory audit 21-22 different? And why is it that we are discussing this topic today? We've been doing audit ever since we become chartered accountants, right? But then why are we talking of statutory audit 21-22 this time? And why is it so necessary? It is, I have already said, the Schedule 3 has been revised. First of all, CARO 2020 is now applicable for financial year 21-22. And the company's audit and auditor rules 2014 have also been amended. Precisely Rule 11 has been amended. Okay, and there has been some additional reporting that we need to do in the independent auditors report for companies. Now, therefore, given the fact that so many additional reportings have been included this time, it is important that we as auditors of companies be aware of certain checkpoints and be prepared that these are things that we have to see beforehand only. It is going to improve the audit procedure and it is also going to make it more smoother, because कल को ऐसे नहीं होना चाहिए that we finish the entire audit and when we are sitting to draft the auditor's report or when we're sitting to draft CARO, we realize that this aspect has been, we have not gone into the audit procedures for the same. So like Adokya sir was saying, the entire audit assignment has to be driven around the standards on auditing, which is the science behind doing an audit. So therefore, a lot of essays will now have to be taken care of, and we have to include a lot of additional checkpoints in our respective audit programs. First checkpoint. We all know when we are talking of Schedule 3, the most talked about thing was rounding off. What is our responsibility as auditors? I will not discuss Schedule 3 per se because I'm sure each one of us has gone through the entire changes, the gamut of changes that have come in Schedule 3. What we are trying to do today is to see from an auditor's perspective, what are things that we will have to keep in mind. To the technical team, I think Parth sir is taking care of. Can I just put in few questions and the answers? If I can see in my chat box, that will be good so that I can interact with the audience. Yeah. We all know that Schedule 3 is wanting us to round off figures. It is wanting companies to round off figures in financial statements. What is our responsibility as auditors? And what are the essays that would impact our decision of reporting on whether rounding off was correctly done or not? First question is whether rounding off is appropriately done. Second question that should come in our mind as auditors is whether adequate disclosure has been made in notes to accounts by the management, stating that figures in the financial statements have been rounded off to nearest what? Nearest hundreds, thousands, lakhs, or millions. These two questions should primarily come to our minds. putting in a question here just for the sake of getting answers from the audience is, what if you were to audit a company and the company's management has not applied rounding off this time in financial statements of financial year 21-22? What would be our approach as auditors where, while we are auditing such a financial statement where no rounding off has been done? Quickly, I would request the audience, we have 1300 plus audience today with us. Quickly, if you can put it in the chat box of what you would do as an auditor if financial statements have not been rounded off. Can we have few answers, please, from the audience? Parth, sir, I hope we can, you can relay the answers to my chat box here. Okay, I think I am unable to see answers, but then just food for thought for everybody who's connected with us is, if you were to audit a financial statement of a company, the management of which has not rounded it off, there are certain essays that we will need to keep in mind. Number one is essay 200, which defines true and fair view. What is true and fair view is defined under essay 200. Now, if figures in a financial statement have not been rounded off, it will definitely impair the true and fair view. Whether we as auditors would have to qualify our reports for such a misstatement. For this, we will have to go to the definition of misstatement, which is essay 450, which states that misstatement can be in 4 aspects, that is amount, classification, presentation, and disclosure. Now, when I say that figures have not been rounded off, this is a misstatement of disclosure. When I say whether we have to qualify our reports or not, this would depend on whether there is a misstatement which is material. So now, what is a material misstatement? Iske liye we have to check what is the definition of materiality, which is essay 705. When we go to that concept of materiality, we realize that not rounding off the figures in a financial statement would not constitute material misstatement, because it does not in any way alter the financial position of the company. So therefore, when we all agree and we are all on the same point, when I say that there is a misstatement when there is no rounding off done, but the misstatement is not material. In that case, I do not have to qualify my auditor's report, but my responsibility as an auditor does not end. My responsibility as an auditor would then be to put in an emphasis of matter paragraph in my auditor's report, drawing attention of stakeholders to the fact that the rounding off requirement under the Schedule 3 of the Companies Act has not been done. So therefore, as auditors, it is important that we check whether figures have been rounded off to the nearest hundreds, lakhs, thousands, millions, as may be applicable, right? With rounding off, I think that is it about as auditors. If rounding off has been done, it is fair enough. If it hasn't been done, we have to all ensure that we put in an EOM in our audit reports, right? Secondly, coming to property, plant, and equipment. Now, when we talk of property, plant, and equipment, it is important. The first and the foremost important documents that we would have to go and ask our audit clients is the Ppe Register, which is commonly also known as the Fixed Asset Register. When I say Ppe Register, when you ask your audit clients about the Ppe Register, A lot of your audit procedures will be taken care of through that. Application of AS 26 or Ind AS 38 as is applicable is with respect to intangible assets. We all appreciate and we all understand that Schedule 3, the revised Schedule 3, has demarcated intangible asset as a separate line item under property, plant and equipment. Now, therefore, it is important that separate disclosure of intangible assets is clearly made. Also, as auditors, we have to also maybe take care of, in certain cases, we will have to consider the applicable documentation requirements of intangible assets as laid down in Copyright Act, Patents Act, Trademarks Act, etc. With intangible assets, the challenge would be to understand how these intangible assets have been recognized and recorded. And for this, a lot of reference will have to be made to AS 26 or Ind AS 38 as is applicable to your financial statements. Another important thing that came in this year's auditor's responsibilities of reporting through CARO was also checking the title deeds of all immovable properties of the company. I'm sure we've been doing this as part of our, as part of our audit exercise. But if we have been missing this out in the previous years, this year we do not have a choice but to take care of all title deeds of immovable properties of the company. Another important thing that is to see is whether if in case an immovable property is not in the name of the company, that is to say the title deeds are not in the name of the company, as auditors, we have to analyze and report in CARO that whether there is an existence of dispute. Now, when we say dispute, there is nowhere in the Companies Act that the word dispute has been defined as. So therefore, where do we get the definition from? So the word dispute, the definition we would definitely borrow from the Insolvency and Bankruptcy Code, right? So in case there is a dispute, that dispute also needs to be recorded. Section 187 of the Companies Act 13 requires a company to maintain a register of investments also. Now, as auditors, we can also have reference to that register to see whether properties not held in the name of the company are entered therein, and then relevant inquiries can be made from the audit clients. It may be noted that investment property and non-current assets held for sale will be considered by the auditor for reporting under this clause. Auditor need not report in respect of other immovable properties not classified as property, plant and equipment, as they are outside the scope of this clause. Of this, when I say this clause, I mean the clause of property, plant and equipment in CARO, right? So items may relate to inventories of immovable property for a real estate company. We all understand that real estate company may have immovable property as their inventory. In such cases, the title deeds need not be verified. But in all other cases, the title deeds of all immovable properties of companies will have to be verified. The challenge here would be cases where title deeds would not be available, or if they are available, they are the companies claiming that the title deeds are indeed available, but they are not made available to you for investigation as auditors. The challenge here would be that, apart from that, as auditors, it is important that we verify these title deeds. Again, what constitute title deeds is also not defined. From general understanding, it could be the land records. If the immovable property we're talking about is land, it could be land records, it could be the Jamabandi, it could be the mutation, it could be related documents. So title deeds have not been defined, but I'm sure as auditors, we can infer it as any document which establishes ownership of that particular immovable property. Continuing from therein, this year, there has been another reporting requirement for auditors, which is to report whether any revaluation of assets has been done during the year by the management. If so, whether the revaluation was done on the basis of the report from a registered valuer. Now, any revaluation of assets, we have to understand as auditors, has to be done, and its compliance has to be checked with para 53 of AS 10, which states that management would visit or revisit its assets every year and see if any of the assets needs to be revalued. Also, by registered valuer, we mean valuers which have been defined under Section 247 of the Companies Act. As auditors, we have to be very, very careful and see that the report that is presented to us by the management against any revaluation of assets is indeed by a registered valuer registered with IBBI, which is defined under Section 247 of the Companies Act. It cannot be a report from any bank and panel valuer or so. The auditor shall consider this copy, and as auditors, we must retain a copy of that registered valuer's report as audit evidence, and all procedures relating to audit evidence as mentioned in SA 500 have to be taken care of. Reporting for revaluation will be as per the revaluation model as stated in AS 10 and in AS 16 as may be applicable. We also have to understand that if a single item of PPE is revalued, the entire class of PPE to which the item belongs shall have to be revalued. So as auditors, these are key points that we will have to check while going through the PPE register, because reporting of all this is this time mandated in CADO. So therefore, we have to visit these points at the time of doing audit. Also, this year, both the management as well as the auditor has to report on whether there has been any Benami transactions, whether there has been any notice under the Prohibition of Benami Transactions Act, which has been received by the management of any company. Just about 10 minutes before I started my deliberation, Aditya sir was talking of this particular essay 250, which is consideration of laws and regulations in an audit of financial statements. Now, as auditors, it is now becoming more and more impending on us to be aware of almost all commercial laws that are commercial, economic, and labor laws that are applicable on any company, any auditee company. Because now in this particular case also, when we are talking of Prohibition of Benami Transactions Act, we have to understand and appreciate that a notice under Benami Transactions Act, if received, is only reportable. It is not, for example, if let's say the company receives a notice from the income tax department stating to explain sources of income from which they have bought a particular piece of land. Now, this notice is not a Benami notice. This notice is a notice wherein the income tax is only seeking clarification as to the sources of income from where the land has been purchased. In order to report for Benami transactions, the notice must be issued specifically under the Prohibition of Benami Transactions Act, right? And special emphasis as auditors has to be given to SA 250 here. It may be noted that reporting under this clause is limited to adequacy of disclosure in financial statements and to cases where proceedings are initiated with the company being treated as Benamidar. The reporting is not applicable where notice is received by company as a beneficial owner. A company can be a beneficial owner. If notice is received for beneficial ownership, it is not reportable. And as auditors, our responsibility is only confined to whether the disclosure has been adequately made in financial statements. We did not comment as auditors on the notice or whether the property is indeed Benami or not Benami, etc. Our reporting requirement is only to the extent of whether the disclosure, adequate disclosure of the notice being received has been made in the financial statements or not, right? So checkpoint number 2, which is property, plant and equipment. This, our usual checking of property Ppe registers or the fixed asset register as it is commonly known as, would need a slight bit of expansion this time. Also, AS 10, para 53 AS 10 says management must revisit. I'm sure as small and medium practitioners, we audit a lot of private companies where none of the fixed assets have been revalued for the last many years. So as auditors, we have to now start being more vigilant about these kind of assets which have not been revalued for many years now, and whether revaluation is indeed necessary. If at all revaluation has been done, whether it has been done on the basis of a valuation report from a registered valuer or not. Coming to the next checkpoint, which is the inventory. Now, all this while, until last year, we have been reporting on physical verification of inventory. So, what is new this year? What is new this year is the fact that the auditor has now been mandated to comment on whether the coverage and procedure of physical verification adopted by the management is appropriate. Now, this has cast a huge responsibility on the auditor, because the auditor now has to the auditor has to now be satisfied on the coverage and procedure for physical verification. Now, SA 501, which is audit evidence specific considerations for selected items, requires that the auditor shall obtain sufficient appropriate audit evidence regarding the existence and condition of inventory by, number one, attending physical inventory counting unless impracticable to do so. Evaluate the management's instructions and procedures for recording and controlling the results of the entire entity's physical inventory counting. Observe the performance of management's counting procedures. Inspect the inventory and perform test counts. Performing audit procedures over the entity's final inventory records to determine whether they accurately reflect actual inventory count results. Now, in order to be able to comment on whether the coverage and procedure for physical verification is appropriate and adequate, we would, as auditors, be mandated to attend a physical inventory counting. Also, whether they have been done at reasonable intervals, and how, as auditors, how feasible it is to attend almost every physical counting is something that we are left with food for thought. But otherwise, as per SA 501, in order to report on whether physical counting of inventory the process is adequate or not, these are 5 steps that we should do. Attend the physical inventory counting, evaluate the instructions and procedures for recording and controlling the inventory, observe the performance of management's count, how are they even counting the inventory, inspection of the inventory by our own selves, and performing test counts of certain products. Let's say a company dealing in 100 products, we would want to do test count of close to 10% of the products to see, to randomly check whether the inventory verification is adequate or not. SA 200, which says that the matter of difficulty, now a lot of times we satisfy ourselves by saying that it is practically impossible to attend physical inventories, or we do not have the time, or the cost involved is too high, the client does not pay us so much fees, etc. SA 200 categorically states that the matter of difficulty, time, or cost involved is not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative, or to be satisfied with an audit evidence that is less than persuasive. So therefore, if at all sometime a question is raised on us stating that why have the verification process not been corroborated by you, so as auditors, we do not have the plea of stating that there has been a difficulty, or there has been time constraints, or there has been cost constraints, because the SA 200 prohibits us from giving this kind of a excuse for not verifying the process. Also, Appendix 4 of a guidance note on audit of inventories lays out a management representation letter that can be obtained for inventory as auditors by us. Guidance note on audit of inventories, this Appendix 4 gives a ready to use management representation letter, which we as auditors can use for inventories, because therein the management states what is the procedure by which they verify the inventory, what is the periodicity in which they are doing it, and those details. So this kind of a document will form a very important document in our audit documentation file, so which we must all keep. Moving forward to this, with this inventory as key checkpoint only, stock and book debt statements have to be reconciled with books of accounts. This we all understand and appreciate, because this clause is present both in Schedule 3, and if working capital limits are more than 5 crores, then we as auditors have to report any variance between the stock and book debt statements and books of accounts in CARO also. Now, given this new reporting requirement, it will be important for us to see and prepare a reconciliation of these figures mentioned in the stock and book debt statements with books of accounts. 2 or 3 challenges herein. Number one is authenticity of stock and book debt statements have to be established as auditors. Now, in certain cases, it might be so that the stock and book debt statements submitted to the bank are not available, or stamped stock and book debt statements submitted to the bank are not available for your verification. And the management has submitted a set of stock and book debt statements to you. As auditors, we have to establish authenticity of these documents. Now, in the absence of any stamped received document, how do we as auditors establish authenticity of stock and book debt statements? We have SA 505, which is external confirmations to our rescue, wherein we can seek confirmation from banks or financial institutions that this is indeed the stock and book debt statement submitted to you. In practicality, how much of a response are we going to get to such external confirmations is a question mark to be taken care of. But the moment we send in an external confirmation, we as auditors are fulfilling our duty to confirm the authenticity of the stock and book debt statement submitted to us. Whether these stock and book debt statements agree with books of accounts or not needs to be established. Another problem here would be cases wherein books of accounts do not maintain inventory records, or quantitative details of inventory are separately handled in case of smaller companies. Therein, these problems may arise for auditors, and extra audit evidence or audit procedures may have to be applied. Key checkpoint number 4 is loans and advances given. When we talk of loans and advances, so much emphasis on loans and advances this time. If you look at revised schedule 3, or even if you look at auditor responsibilities to report on loans and advances given. So therefore, the whole section of loans and advances have to be very, very precisely audited. We start with loans and advances given, and then we take it to loans and advances received. First of all, let's start with loans and advances given. When I say loans and advances given, the first and foremost thing as an auditor that I feel we should do is to divide the entire loanee section into JV, subsidiaries and associates, and other entities. We should also divide loans given to promoters, AMPs, related parties. Now, before I even move forward from here, how do we as auditors check whether who are the promoters of a company? Because we are ultimately auditors who are third-party people going into a company trying to find out whether the true and fair view of the financial statements has been properly reflected or not. So now how do we suggest who are promoters of the company? Now, somebody would tell me that Section 269 of the Companies Act clearly defines who's promoter. Very well. But the definition of 269 as given in Companies Act 13 states whoever has control over the board, or as per whose advice the board is accustomed to act. Let me give you a small example. If me and my husband are running a company, and my husband discusses every business prospect with his father, on whose advice he generally acts. In this case, my father-in-law is also a promoter of my company. Now, how does this fact be known to an auditor who is visiting the company for close to maybe 10 to 15 days for conducting the statutory audit? This problem will be a practical problem with all of us doing audit of companies this year, of identifying promoters. Now, there are 2 ways to do it. If it is a listed company, you would know people who have been named as promoters in prospectus. If it is an unlisted company, every unlisted company is filing its annual return. So as auditors, we can take hold of the annual return and see who are the people who have been named as promoters in the annual return, number 1. Number 2, we should all seek management representation letters in accordance with SA 580, wherein the management itself will give you a list of people stating these are the promoters of my company. Once we have that list in our audit documentation as well as the copy of the annual return, which is Form MGT 7, we should evaluate, we should start breaking down the list of loanees into promoters, KMPs. KMPs is a relatively easier definition to comprehend, that is the key manager personnel, and the related parties, which is also clearly defined in 276. So now, if you ask me, the first thing I would do as an auditor when I start to audit the loans and advances given section is to first divide this whole section into JV subsidiaries, associates, and other entities, also promoters, KMPs, and related parties. Second thing I would start doing is to check the terms and conditions of these loans and advances, including the repayment schedules. So now, ideally, a company should be having loan agreements which are the underlying documents of any loan that has been given by the company. Now, also, if they are related parties, you would have to go and check section 188 compliances also, extract of board resolutions that may have been passed, extract of special resolutions that may have been passed, have to be taken care of. Whether any loan or advance in the nature of loan granted, which is fallen due, has been renewed or extended, or fresh loans has been given, to settle the overdues of existing loans. Loan documents have to be thoroughly scrutinized to understand what is the purpose with which we are giving this loan, whether any existing loans have been satisfied, but in the meantime, we've also passed on a new loan. So these kind of things have to be corroborated from the financial figures by looking into books of accounts and the loan documents thoroughly. Provisions of 185 and 186 have to be complied with. As auditors, we have to have a very, very sound knowledge of at least these two sections, including section 180, which is powers of board, 188, that is related party transactions, 185, 186. 185 and 196, 185 is basically loan to directors and interested parties. 186 is other loans, that is loans, intercorporate loans, investments, guarantees, securities, etc. So these two sections have a lot of conditions pursuant to which only you can give loans. For example, section 186 says you cannot give loan in excess of 60% of paid up and free reserves or 100% of free reserves, whichever is lower. उससे ज़्यादा आप दोगे तो special resolution pass करना चाहिए. So as auditors, we have to first see what are the loans that have been given, whether limits under section 186 have been violated. If they have been violated, we need to seek documents such as Form MGT 14, which the company must have filed rather, for the special resolution that must have been passed. If the special resolution has not been passed, we as auditors have to report that section 186 has not been complied with. This will be a specific reporting in CARO this year, because they have specifically asked whether provisions of section 185 and 186 have been complied with. So with loans and advances this year, there is going to be a lot of exercise, a lot of brainstorming with the Companies Act and its sections. Loans and advances taken now, when I say loans and advances taken, first and foremost important thing that would be, and this is also a new clause this time, in the revised schedule 3, which the management will also report, and as auditors, it always has been our duty, and I'm sure we've already been doing it, is to check whether the register of charges is first of all maintained or not. Secondly, this register of charges under section 85 has to corroborate with the register of charges maintained under 81. Now, who maintains the register of charges under section 81? The register under section 81 is maintained by the registrar of companies. This is nothing but the index of charges which we see on the MCA portal. So therefore, our register of charges, books of accounts, and index of charges have to all match, which means that all assets on which we've created a charge, the charges have to be duly registered with the ROC. In case the charges have not been registered, or any loan which has been satisfaction has not been registered with the registrar, in that case, the management will report, the management will give a disclosure to this effect in the notes of accounts of the financial statements. We need to look out for that disclosure as auditors. Secondly, whether the company has defaulted in repayment of loans and other borrowings. For this, we have to do a thorough checking of the loan documents. Application of loans, short-term versus long-term, and diversion of funds. Now, this again, as auditors, in order to decide whether there has been any whether short-term funds have been used for long-term purposes or vice versa, or to evaluate whether there has been a diversion of funds, we have to be very, very careful in reading the loan documents and understanding the purpose for which any loan was taken by the company. There could be certain instances when, due to unavoidable circumstances, the company has utilized funds for some other reason. If adequate disclosure has been made in the financial statements by the management, we as auditors would have to see whether any kind of reporting from our end needs to be done. For example, let's say a company has been sanctioned a loan at the fag end of the year, wherein they could not use that fund immediately for the project. In that case, they have, let's say, invested that amount into a fixed deposit. That would not constitute diversion of funds, but of course, the fact that this was done has to be mentioned in the financial statements. And as auditors, it is our responsibility to check whether that fact has been properly reported or not. Whether the company has taken any funds from any entity on account of its obligations of subsidiaries, associate, joint ventures, again, we have to understand, first of all, whether the company has any subsidiaries, associates, or joint ventures, and whether any borrowing has been done in their respect. Whether the company has raised loans during the years on the pledge of securities of subsidiaries, joint ventures, associate companies, same here, the loan documents, a thorough scrutiny of the loan documents would give answers to such questions and would be able to report correctly in Caro. Now, whether loans or investments received as intermediaries, here there would be another point to see in given, which I missed out in the slide, is whether any loans or advances have, whether loans or advances have been made into intermediaries, or whether loans or investments have been received as intermediaries. Now, this point, why do we need to investigate? So long we were not mandated to report on this, on whether we have advanced any loans into an entity to act as an intermediary and in turn give that loan or invest into another entity as beneficial owners on our behalf. Or the reverse situation that somebody has given us money and said that you invest this money into another company on my behalf as beneficial owner. So if this kind of a thing has been done, we as auditors need to report not in Caro, but in the independent auditor's report. And therefore, we have to see and understand the loan documents or investment documents clearly to understand whether these funds have been received and then forwarded into some other entity or not. Another important checkpoint would be deposits. So long we are all aware that deposit rules are very strict in the Companies Act, and Section 73 to 76 is all about deposits. Now, there are certain amounts that are deemed to be deposits, and there is a huge list. For example, any advance from customers which has not been appropriated within 12 months is a deemed deposit. In order to examine instances where an amount could be deemed deposit, the auditor should obtain the list of amounts received in the course of or for the purposes of business of the company, for example, advances, security deposits, and assess them against the requirements of subclause 12 of Rule 2(1)(c) of the company's acceptance of deposit rules, and to determine whether such amounts have assumed the nature of deposits. Where available, the auditor should examine the form DPT-3 filed by the company. We are all aware that every company is mandated to file a form DPT-3 every year. And for that DPT-3, we have to, the company has to report what are amounts which are deposits, what are amounts which are deemed to be deposits, and what are exempted deposits. So, as auditors, two things we need to do in order to be correctly able to report on the point of deposits is, number one, have an analysis of all kind of amounts that have been received by the company during the year. When they say security deposits, they specifically say security deposits because trade deposits are exempt. They are not considered deposits. So therefore, if security deposit is in the nature of trade deposit, it is still exempt. But if it is not in the nature of trade deposit, then it is a deemed deposit. So therefore, we have to, as auditors, analyze and take a list of accounts received in the course of business and see whether any one of them could assume the picture of a deemed deposit, because then the reporting has to be done in Caro, as well as certain formalities have to be completed as per the Section 73 of the Companies Act. Now, cost records is something that was always there in Caro, but I've still included here in this discussion here today, because in some companies, we might have been, as auditors, missing out on the fact that cost record maintenance and cost audit is applicable to us. So therefore, it is important as auditors also to obtain a written representation from the management stating that cost records are required to be maintained on any product or services under Section 148 or not, and the relevant rules, and whether cost accounts and records are being made and maintained regularly. The auditor should ascertain whether maintenance of cost records has been specified by the central government or not. So as auditors, it is not, we have to all understand as auditors that taking a management representation letter merely does not absolve us of our responsibility to corroborate any evidence. By that, I mean that let's say we are auditing a company X Limited, and the management of X Limited has given us in a management representation letter that for none of the products that the company manufactures or deals in, cost records have been mandated by the central government. It is not complete audit procedure for us as auditors to stop the audit of this aspect only merely on the basis of the management representation letter. As auditors, it is our duty to also corroborate and see whether the cost records have been specified for any of the products by the central government or not. It is possible that maintenance of cost records has been specified for only some of the products or activities. In such a case, as auditors, we will limit our procedures to such products and activities. If maintenance of cost records has been specified, we as auditors, we should obtain a list of books, records made and maintained in this regard. And only then we shall be in a position to comment on whether adequate cost records and cost auditing processes have been done or not. Now, preferential allotment, there is a clause in CARO 2020 which requires auditors to report this year, stating if there is any allotment that has been made during the year, whether requirements of Section 42 and 62 of the Companies Act have been complied with. Now, when like Section 185 and 186, Section 42 and 62 are also two very, very sought after sections. And therefore, we as auditors have to have a thorough knowledge about Section 42 and Section 62, which deal with allotment of securities broadly. Now, Para 2.1 of the Form PAS 4, which is the private placement offer, we all understand, I'm sure, that whenever we do a private placement, we have to give a private placement offer letter, right? So there are certain terms and conditions that every private placement has to be done by giving a private placement offer letter to a select group of people, and then that number of people should not exceed 200. Proceeds should be kept in a separate bank account, allotment to be done within 60 days. If not allotted in the next 15 days, you need to refund. If you do not refund, then there are liabilities that you need to fulfill. So there are a lot of terms and conditions under Section 42 and 62. And as auditors, we have to check whether these terms and conditions have been fulfilled or not. A very small fine-tuning I will do here, that if we do a very, very if we do a very close reading of this Companies Act, we would realize that the private placement offer letter or the rights issue offer letter cannot be hand delivered, because the option for hand delivery of notice is not there in the Companies Act. Now, in such a case, when the option for hand delivery is not there, if you do not get proof of sending of a letter, as auditors, it is our duty to report that provisions of Section 42 and 62 have not been completely complied with in this kind of an allotment. So very small fine-tuned points, but as auditors, Section 42 and 62 have to be looked into. Rule 13 of the Company Share Capital Debenture Rules requires company to disclose objects of issue in the explanatory statement to be annexed to the notice of general meeting. Accordingly, auditors should compare the objects of the issue noted in the explanatory statement with the actual utilization. In the CARO, they have also asked the auditor that monies raised to subscription have been used for the purposes they have been raised. How do we know what is the purpose? We get to know this from the explanatory statement of the notice that the company must have issued to its shareholders. So a copy of that notice has to be taken by us, and we have to see whether the money that was raised was actually used for those objects or not. And accordingly, reporting should be made in CARO. Coming to another interesting thing, that is fraud. CARO 2020 has gone a little ahead and stated fraud needs to be reported. Okay. An auditor needs to report whether any fraud has been noticed or reported either by the company or, and they have not limited this fraud to only officers or employees, right? The term fraud as defined in explanation to section 447 in relation to affairs of a company includes any act so and so. This is the basic definition. Now, SA 240 also defines fraud, and it says an intentional act by one or more individuals among management, those charged with governance, employees, third parties, involving the use of deception to obtain an unjust or illegal advantage. Now, the definition as per SA 240 and the explanation as per 447 are similar, except that 447, under 447 of the Companies Act, fraud includes acts with an intent to injure the interests of the company or its shareholders or creditors or any person, whether or not there is a wrongful gain or wrongful loss. So now, two types of intentional misstatements are relevant to auditors' consideration. When I talk of fraud, now there could be a multitude of frauds, and as auditors having limited time and limited capacity to audit, we would not, maybe we are not expected, and rather we are not mandated also to look into almost all kinds of frauds that could happen. As auditors, our auditor consideration of fraud could be limited to two types of misstatements. Misstatement reporting resulting from fraudulent financial reporting, and misstatements resulting from misappropriation of assets. So as auditors, we should primarily be concerned with two kinds of frauds. Misappropriation of assets, उससे जो misstatement result हो रहा है उसका, या फिर reporting गलत हो रहा है उसके कारण जो misstatement हो रहा है वो. So now, as auditors, we do not know that during the whole year, whether there was any fraud that was reported by any employee, anything that happened within the company. I'm sure we are not in a position to know. So therefore, as auditors, we have to obtain written representations. But again, obtaining this written representation alone will not absolve us of our responsibilities. Necessary audit procedures, if the auditor feels that there is a lack of internal control, internal financial control, or there is a possibility of fraud, then the auditor has to evaluate and do additional audit procedures in respect to frauds. Clause 9C of CARO basically tells the auditor to report whether he has considered whistleblower complaints. Now, this is a very new reporting requirement for auditors, and the auditor has to be mindful while performing the procedures under this clause. The auditor should consider whether additional procedures are required to be performed under SA 240. The establishment of whistleblower mechanism is not mandatory for all companies, and therefore the auditor should consider the requirements prescribed in the Act and in the SEBI LODR regulations. Section 177 subsection 9 requires the following class of companies to establish a vigil mechanism. I'm sure as auditors or as small and medium practitioners, maybe we are sometimes we are not even aware that our company is mandated to have a vigil mechanism. So every listed company, companies which accept deposits from public, companies which have borrowed money from banks and public financial institutions in excess of 50 crores. Now, the third applicability could be applicable to a lot of private companies or small companies. So therefore, as auditors of private and small companies also, it is important we see and look into this aspect. 50 crore rupees of borrowings, अगर आपके है company में, then the company में एक vigil mechanism होना चाहिए, and उसका proper documentary proof as auditors हमें देखना होगा. Internal audit पे भी इस बार चर्चा करने बोले हैं. In CARO, auditors are requested, auditors have been mandated to report on internal audit. Whether the internal audit reports have been considered is what we have to report on. Now, it is important to understand that how do we as statutory external auditors see that internal auditor considerations have been taken by us or not. So we have to discuss with the management and arrange that the internal audit is completed before the statutory audit. That is the first and foremost important thing to be done. Secondly, whatever periodicity mein internal auditors report dete hain, that report should be made available to the statutory auditor to review. Now, the statutory auditor should also assess the impact of control deficiencies, if any, pointed out by the internal auditors while framing the IFCO-FR. आपका internal financial controls पे जो हमें देना होता है report, उसको frame करते वक्त we have to assess the impact of control deficiencies, if any, that has been pointed out by internal auditors. As guided by SS 610, the statutory auditor may also consider whether to reassess the nature, timing, and extent of his audit procedures based on the observations of internal audit. Again, I would like to reiterate, as auditors, it is not sufficient that thing has been mentioned in the internal audit and we, as it is, take it out from there and do not perform any audit procedures of our own. The internal audit reports have to be only considered, and we as auditors have to apply our audit procedures on the same to see what opinion we want to form about that deficiency. Right? So internal audit reports have to be considered, but additional audit procedures have to be done to obtain sufficient audit evidence for our own opinion. We cannot rely blindly on whatever is reported in the internal auditor's thing. We also have a guidance note on CARO 2020 issued by the ICAI. Therein, you have 3 or 4 circumstances given under this clause of internal audit, and the institute has provided guidance to its members on how you can report. Say, for example, the internal audit reports are not available for verification in one of your audits. In that case, how can you report that in CARO? That guidance has been given in the guidance note. So the given instances, there are 3 or 4 instances, if I clearly remember, and the institute has suggested ways in which you can report. So reporting under this clause, the guidance note can very well be referred to. So in fact, for all the clauses, we can refer to the guidance note because thorough discussion has been done. Non-cash transactions with directors. Now, this is a very, very vast topic to be discussed. First of all, we have to obtain a management representation letter. Secondly, a lot of documents will have to be checked here. Number one, we all know that at the beginning of every year, every director files a form MVP1 wherein he states a list of all his relatives and all the related parties, etc. Secondly, we have to check the register of loans, guarantees, securities, acquisitions made by the company. We have to check the register of related parties and contracts. We have to check movement in property, plant, and equipment to see whether, let's say, for example, the company had a car which it has given it to the director. If such a thing has been done, there will definitely be a disposal in the property, plant, and equipment register. So if we see the Ppe Register, we will get to know if any such kind of a movement is there. Minutes book of general meetings and board meetings, if we go through, a lot of things get cleared from therein. We could possibly see if the director has been given a flat which he's staying in, the rent has been borne by the company, something like this. Okay. Reports available in the public domain which are to be substantiated from the company. अगर कोई चीज न्यूज में है, आपको लगता है इसके बारे में आपको मैनेजमेंट को पूछना चाहिए, तो हमें बात करनी चाहिए. Report on annual general meeting pursuant to company's management and administration rules. So this is basically a table that I have formulated for us to know that these are specific things that we can check for non-cash transactions with directors, because these kind of transactions will not be apparent from books of accounts. So in order to form an opinion on this, we will have to look into other associated documents that a company has to keep. Right? The auditor should check compliance with section 192 of the Act and verify the notice of general meeting, that it includes particulars of arrangements along with value of assets involved in such arrangements. The said value shall be calculated by registered valuer. This time there is additional reporting requirement on resignation of auditor. stating that if you are an incoming auditor for any company and last year the audit has been done by any other auditor and he has resigned, we have to report on whether the reasons why he resigned have been taken care of or not. Incoming auditor should obtain a copy of letter of resignation stating the reasons as submitted to the management and copy of Form 83 submitted to the ROC. The incoming auditor should also carry out the following additional audit procedures. So reading minutes of board meetings, inquiring from the management and reading the communication to audit committee if there is any audit committee, and exercising his professional judgment while evaluating the reasons for resignation. Now further, the incoming auditor should also consider the audit evidence obtained during audit while performing audit procedures under SA 500. For example, if the incoming auditor obtains additional audit evidence which relates to reasons for resignation of the outgoing auditor, the incoming auditor should consider such evidence obtained while issuing an audit opinion for the current year. So resignation has been considered very, very seriously this time, and the auditors have been mandated to report that whether they have looked into the reasons why an outgoing auditor resigned in the first place. So necessary audit procedures have to be done in this point. But another important thing that they are asking this time the auditors to report is to analyze and tell whether their going concern will be impaired or not. Now, going concern is an assumption which companies are to make in their accounting policies and accordingly prepare financial statements. So while as auditors, we need to comment on going concern on the basis of financial ratios. We all know Schedule 3 this time has mandated companies to give in a list of ratios. Aging and expected dates of realization of financial assets and payment of financial liabilities. Other information accompanying the financial statement, for example, director's report, management discussion and analysis, if these are prepared and provided before statutory audit, we should definitely go through them. And auditor's knowledge of the plans of board of directors and management plans. The auditor has to make the assessment as on date of audit report and should perform necessary procedures as required by SA 560. We should read the section of director's report, management discussion and analysis forming part of annual report, which is required in reporting. But ultimately, the key checkpoint for going concern would depend on how analytically we can evaluate the financial ratios. Stress has to be given on audit procedures to analyze what is the realization time of financial assets and what would be the payment of financial liabilities due dates, right? So to understand what is the going concern and whether going concern has been impaired, will require some extra bit of working this time by the auditors. The last bit that I would like to take is the corporate social responsibility. We all know Section 135 is the section governing CSR. I would not like to talk too much on it, but as auditors, two things importantly we must take care of. And there are documents that we should know and we should keep in our audit documentation is the board's approval of CSR policy. If CSR is applicable to a company, it is mandated to have a CSR committee. It is mandatory for them to have a CSR policy. So all these documents we have to have in our audit documentation to justify our opinion on CSR. Agenda and minutes of meetings of CSR committee, we should have workings of the amount required to be spent under Section 135 of the Act. This we must have. We have to have confirmation from the management that whether CSR activities that they have taken is in accordance with Schedule 7 of the Act. This will not absolve us of our responsibility. Again, I'm saying we have to perform our own audit procedures to see that these activities are indeed done as per Schedule 7. Auditor should further verify that any unspent amount in respect of other than ongoing projects has been transferred to a fund within a period of 6 months from the end of financial year. These compliances are mandatory and the ministry is very, very seriously looking after these things. So as auditors, we have to be very, very vigilant and we have to report if something like this has missed. If the amount is unspent on account of an ongoing project, within 30 days, the amount should be transferred to another account. If it is not on account of an ongoing project, within 6 months of the expiry of financial year, the amount should be transferred. So as auditors, we have to obtain supporting documents such as receipts, payment challans, bank statements to obtain evidence that the amounts have been appropriately transferred to a fund specified in Schedule 7. So therefore, as auditors, it becomes very important to see, when I say compliance with Section 135, a lot of things, a lot of documents will have to form part of our audit documentation. Right? So with this, I think I would like to end my deliberation. I've overshooted the time by close to 20 minutes. If there are any questions that we can quickly take up.
Yes, audience. Hello.
Yeah. I think we have a few questions here. Disclosing that presentation of FS has been changed for better presentation. Reported to EOM para. I think these are replies to the rounding off question. Also, there is one question. Can you guide about the pre-operative expenses disclosure if commercial operation not yet started? For private company, is it necessary to revalue asset once in 3 years? If accounting standard is silent, the accounting standard is not silent, sir, and there is no bifurcation between public or private. It simply says that the management should revisit PPE and see if any of the PPE needs to be revalued. This is a yearly exercise that must be done. If PPE details are maintained simply in Excel, not in proper format, as auditor, what care should we take in CARO? If PPE details are simply maintained in Excel, there is no security. The guidance, the AS clearly says that Ppe register can be electronically maintained, but there are two conditions. Number one, it should be easily retrievable. Number two, there should be no security threat to that document, as in no changes should be easily be allowed to be made. Now, if in your case it is simply maintained in Excel and not even in proper format, then in CARO we have to report that physical verification of the fixed assets was not possible or was impaired because of non-availability of Ppe register. So these kind of things have to be reported in CARO. Any other query that is therein? Well, I think there are no other questions. So in that case, that is all from my side. Yeah, thank you so much.
Thank you, Swati madam. We got a very good idea about the checkpoints. Sometimes we know the things, but when we heard from a person, then we recollect every memory, and it's very easy. And sometimes it gives a very quick view. You have given a very quick view, so we can able to do our auditing process very easily. So I'm very thankful and obliged for your checkpoints, and we should all take care of this checkpoint while doing audit, so we can able to answer and give the replies to department. Thank you so much, madam.
Thank you so much.
Hope the candidate get a good view about the important checkpoints and system and opportunity for CA. And I hereby like to conclude this webinar, and thank you all the participants.